If you're looking for a video to compare company and sole trader business in Australia, this video is for you. I'm Natalie Lennon, founder and director of Two Sides Accounting. I'm a chartered accountant and tax agent with over 20 years experience. And this is something I get asked all the time, and that is, what is the difference? What are the key differences? Which one should I choose? So the first thing is cost. Cost is very important when looking at which structure to start with. Now, a sole trader, you can set one up actually for free. All you need is an ABN, and you can get that from the abr.gov.au. I'll put the links below. Please just don't go Googling, because there is other websites that are scam that will steal your details, because to get an ABN, you've got to put in your TFN, your date of birth, your address, and all those things. So don't go just putting that into some random website. I've seen that quite a bit lately, and people getting their identities stolen. Now, the next thing I would recommend is to get a business name. So register a business name. So I see a lot of small businesses setting up, even just a side hustle that grows, and they forget they haven't registered the business name. So the same way that you're checking the domain name and the social handles and all those fun things, you need to also check that the business name is available. And once again, I'll put the link below on how to search that because it needs to be through the ASIC website. So then compare it with a company, which is a little bit more expensive to set up. Now, you can set it up yourself. I don't recommend it, because if you set it up yourself, you can do it on the ASIC website, and I'll put the link down below for that as well. But if you set it up with ASIC, all you're going to get is a certificate of registration. You're not going to get a constitution, which you're required to have. And in fact, if you're borrowing down the track, the bank may want to see the constitution. So we've had times we've had to recreate those for clients. It doesn't give you the templates for the minutes and the resolutions and all the other things that you have to do when setting up a company. So we definitely don't recommend doing it yourself. But if you want to, at the moment, the cost is $597. It is the 31st of January, 2025, as I'm recording this video. And that's the ASIC fee. So what I would recommend is seeing an accountant. So be a consultation, so you can have a chat through which structure is best for you, and then let them set it up. They do charge a little bit more, in fact, probably a couple of $100 more, because they've got to prepare all the documents that go along with it. And an accountant can also manage your ASIC data. So you're required then by ASIC to make sure you update your address if you move. Any shareholding changes have to be done, director changes, secretary changes. You'll also need what's called a director ID when you set up a company. That was something that came into effect a couple of years ago now. So you need to apply for the director ID first. I'll put the link down below on where to get that to. So while we're still on cost, let's look at the ongoing fees. So the ongoing fees of a sole trader in its most simplest form would just be a tax return, which, depending on your accountant, you're looking at anywhere from a couple of $100, up to maybe $1,000, depending on your structure. Once again, if you're registered for GST and you have employees, then you'll need some software. You might need to do a quarterly BAS and all those other things, but that will be the same in a company. But in the most simplest form, if we're just sort of comparing the tax return cost, then it'd be a lot lower. And then in a company, you're probably looking at anywhere from $1,500 up to a couple of thousand. Once again, depending on the complexity of it. How many employees have you got? Have you got director loans? Have you got cars and car loans? And what else is in there? Are you at e-com? Do we have to reconcile the stock? Is there currency conversions? Like all the things that we need to do at the end of the financial year. So sole trader, $500 to $1,000, company $1,500 plus. So there's quite a difference there. So the next thing is perpetual succession. And what that means is if you're in a sole trader business and you pass away, the business has to be closed or sold. No one can step in and run the business indefinitely, because you are the business. Whereas if you've got a company, on the other hand, and you get hit by a bus tomorrow, then someone else could be appointed director. If you were a sole director company, someone else can buy the shares, so your family could sell the shares and the company could continue on. So you wouldn't have to set up a new bank account, new ABN, new TFN, new accounting system. You won't have to change all that stuff that you have to do in a sole trader. So that's something really important to think about. And I always say, start with the end in mind. So if you're setting up a little side hustle, but you have aspirations for it to really grow and kick off, you might want to invest the money and set up a company to start, rather than just set up a sole trader and then change it. You can change it over later on. And there's rules around what's called a CGT rollover, where you can roll it over into a different structure. But it is, like I said, you would need a new ABN, TFN, new bank account, new accounting system, and it can end up being quite expensive to make that change. So it's really important that you think about where you want to go with your business before working out which structure. So the next thing is liability. Now, in a sole trader, as you are the business, you're liable if things go wrong. And I know, yes, you have insurance, and a lot of people have said to me, oh, my insurance will cover. But if you've ever had an insurance claim, you'll understand that the insurance company doesn't work for you. They try to get out of the claim, right? So you want to protect your assets as much as possible. So maybe if you don't own your own home, you don't have any assets, sole trader will be fine. But if you have your own home, you have other assets you want to protect, other entities, you probably want to go into a company structure so that you've got what they call the corporate veil. And look, the corporate veil can be pierced. So, if you commit fraud, you can still be liable for things. There is other things that you are liable for. For example, GST, pay-as-you-go withholding on your wages and your super. You're personally liable as a director for those. And there is other director duties that if you breach those, then you can get in trouble and you can still be liable for. Also, if you're borrowing in your company, the bank will probably want what's called a personal guarantee. So that means that you're personally liable for the debt. So there are some things you will still be personally liable for, but generally a company will have that extra layer of asset protection. So the next thing to consider is tax implications. Now, as a sole trader, the income you earn from the sole trader, and by income I mean your profit, is added to any other income and taxed the same way in your tax return as an individual. And what you'll do is you'll pay tax up to the top marginal rate, which is 45% plus the Medicare levy of 2%, so 47% once you go over 190. But it works in a sliding scale. I've done a whole new video on this. I'll pop it just here so that you can watch it. Compared to a company, in a company you pay, well, most small companies in Australia that earn under $50 million, they're classified as small. 50 million, it's a lot, hey? They pay tax at around 25%. There is some rules around certain passive investment companies that'll pay 30%. So a lot of people look at this and go, well, hang on a minute. Once I earn over the individual highest marginal rate tax threshold of 190, I should be in a company because I'm just going to be saving tax when you're comparing. I've done a whole video on this. Here it is. Check it out. But this is why it's important to get advice to make sure that you're understanding all the different factors and not just what you find on the internet. The next thing to consider, which I did touch on a little bit earlier when we're looking at cost to maintain, is the complexity of the tax affairs. Now, as a sole trader, you're not actually required to prepare financials. So you don't need to prepare any profit and losses and balance sheets, although most of the time we do because the banks are asking for them now. So it's just best practice to prepare them if you do have, a reasonable size business. But in a company, you're required to prepare these financials. And you're also required to document where the company money has been spent. So, like I said before, in a sole trader, the profit is taxed in your tax return. You own the profit. It doesn't matter how much money you draw out because it's irrelevant. You're getting taxed on the actual accounting profit, not the cash profit. Whereas in a company, the company's paying tax on the profit. And then any money you take out then needs to be allocated either wages, dividend, or director loans. Now, there's strict rules around the director loans. I'll do a whole nother video on that. But basically, they need to be accounted for a certain way. And if you don't do your tax return for a number of years yourself and you don't have an accountant looking over it, you can end up paying a lot of tax if you're in breach of these rules. So a little bit more complicated in terms of the tax affairs, and that's why the cost is so much more. But in saying that, a company gives you a little bit more flexibility in terms of, shareholders. So you can put a trust in there as a shareholder, and then you can distribute the profit from the company by way of a dividend down to the trust, and then you can split that income with your spouse or your children to get some tax benefit. And there are some other strategies. I'll do another video on that, but there's more flexibility. Whereas a sole trader, you can't really do much. You could put your spouse on the books and pay them a wage as long as they're working in the business. If they're not, then that's illegal. Don't go doing that. But if they're working in the business, they can be paid a wage. And that's another question that I've been asked on previous occasions is, oh, no, I need to be a company so I can put my husband or wife on the books. You can do it whether you're a sole trader or a company. Now, one of the additional things that goes into the ongoing cost of a company is the ASIC annual fee. So the current ASIC annual fee is $321 as at today, January 2025. And it doesn't involve just paying the fee. Now, a lot of people have a company think, I just get the invoice, I pay the fee, I'm good. No. You actually are required every year to prepare and sign what's called a solvency resolution to state that the company can pay its debts when and if it falls due. And if you're not doing this, you're actually in breach. So this is what your accountant does when they look after your ASIC, we call them ASIC agent services, if you like. So, that's a relatively low cost service, a couple of $100 for your accountant to take care of it. And also to make sure your addresses are updated, because with ASIC, you have to update any address changes within, I think it's 28 or 30 days. Otherwise, you can get a fine. And ASIC is not like the ATO. You can't ring them up and say, whoops, I missed it, waive the fine. Like I've even seen, we had someone actually pass away and we actually had to send a death certificate to get the fee waived. That's how extreme it is. So if you want someone who's moving a lot of the time, you want to make sure that your accountant looks after it so that they can capture it. If it gets lost in the mail, ASIC don't care. Us accountants, we do it electronically so we can clearly see when it's due, when it's been paid, and prepare those other documents that you need to prepare. So in summary, a sole trader, as you can see, is better for a side hustle, a really small sort of business, and a company is more of a business you're going to grow. You're going to hire employees, you're going to have profits, you want to do tax planning, a little bit more complicated. As I said, you can change from one to the other. Now, if you've liked this video, please make sure to like it, hit the subscribe button, turn on the notifications. I'll put all the links below, and I've also got a small basics ebook that I have on my website that you can check out, which has got stuff like this and more.